This is not the S&P 500. No, it is not. It is a daily chart of Bitcoin. By the way, happy 4th of July. I'm Bagadon at Stock Market Caddy. It is Saturday, July 3rd at 11:04. And by the way, it is a rainy, dreary day, at least right now in Tampa, and that's why I'm not golfing. You might be able to hear the rain in the background from my home office. We received a couple of really nice phone calls from people this morning on some of the videos that we've posted. And so we make these videos as educational pieces. And so if you find them educational, if you find them helpful to your trading, be sure to subscribe. It's free on YouTube. And hit the like button, hit the notification button. It helps us with with the algorithms and getting more viewership. What I wanted to speak to you about this morning and follow up to a previous video we did just yesterday on Bollinger Bands, I wanted to make a little comparison between Bitcoin, the price action on Bitcoin over the last, I'd say, month or so, 5 or 6 weeks, and where the S&P is today. So let's get started. Okay, this chart, we're going to kind of pretend that we don't know what happened to Bitcoin over the last 5 or 6 weeks, right? It's this chart is showing us when Bitcoin had this accumulation phase, then the ramp phase, and then the euphoric stage when it got up to $60,000. And we know Bitcoin isn't there any longer, but we want to put on some of the tools that I've been sharing with you and then see what we see and then draw a comparison. Now just imagine if you were coming off of a Friday afternoon back here in April and you had just purchased Bitcoin at 60 or 65,000. What do you suppose the news of the day was when Bitcoin was up here? Right? Bitcoin's going to 80,000. Bitcoin's going to 100,000. I mean, every time it ramps, they just extend the forecast. Would you have been thinking about shorting Bitcoin? No, right? No. You don't short the highs. No. The trend is up. It's up. It's going up. You'd be out of your mind to get in front of Bitcoin and to short Bitcoin. Now, yesterday I put on Bollinger Bands. So we're going to stay with that theme of Bollinger Bands, right? Now, please understand, for education purposes, we do like Bollinger Bands, and we do use Bollinger Bands, but not exclusively. And when we do use the Bollinger Bands and some of the math behind the Bollinger Bands, we use those formulas and there are computer formulas, code, to use on other things, right? So I just want you to know that, okay? And by the way, if you don't know, we have a website called stockmarketcaddy.com, and we're a mentoring site. So we're about teaching, we're about educating, and particularly in using algorithms based on sound principles to get better view of a markets without relying on the noise of the day, right? So, here the noise would have been deafening all about Bitcoin. Technically though, let's put on a Bollinger Band and let's pretend it is, a Friday afternoon or, whatever it was. It's April, what was the date on this? Let's pretend it's April 13th. And let's see what we see together and see if these Bollinger Bands and what we discussed yesterday holds any, would have held any value to you. And then we'll take a look at the S&P. So we have a Bollinger Band here. This is a standard Bollinger Band. I'm going to turn this on. And what this is a inputs of 20, 2, and -2. Now, if you're seeing this video for the first time, you want to go back and watch the one we posted yesterday on Bollinger Bands, because I don't want to repeat all that. So here is the Bollinger Band. And you really do want to go back and hear it because, oh, I'm sorry, I didn't mean to do that yet. I forgot I had that there. Okay, I was doing it to make room. All right, so, and in that video, we talked about volatility, the bands showing volatility, and the bands squeezing and bulging, squeezing and bulging. And we talked about how price travels within the Bollinger Bands 90% of the time. And we want to be most concerned, most on guard for when price gets outside the Bollinger and then comes back in, which was right here. Well, you can see it was down here too, but it's most dramatic. There was one right here, pull back a little bit, then broke away, but there was one here, pull back, and then it runs. You're waiting for it to get outside and then pull back, and then we get a pullback. Same thing here, and then up here. Now, what I also want to do though, in yesterday's video, I like to do this with a lot of indicators, even our own, sometimes ones out of what we call out of the box. I loaded in a second time, and in this instance, I set the length at exactly the same, 20, but I set the standard deviations at 3 and -3. And then we get something that looks like this. So what we're interested in is when we get between the 2 and the 3, you almost never get outside 3 standard deviations. Sometimes you do. It didn't come back and then it ramped on. But when you get between the 2 and the 3, you want to be most on guard, because if it comes back in, you're probably going to get a good pullback. So you get outside here, but it doesn't really pull in. And then, you know, we pull back here looking for that reversal candle. Notice this one here, we punched up, but it couldn't hold it, comes back in, we got a nice pullback. And then notice now, had this been a, you know, we roll back, this is a Friday afternoon, and the narratives of the day are, wow, honey, we're going to be rich. Bitcoin's going to go to 100,000 a coin. Whoa, that guy Michael Saylor is going to be $1 million a coin. Oh, Elon Musk. Oh, and you're feeling wonderful. You're feeling warm and fuzzy. Fire up the steak. You know what? I'm going to get filet mignon. Did you see Biden's? You're going to save 16 cents on the thing. Oh, God. If you haven't seen it, the White House put out an inflation notice that the cost of an American barbecue is 16 cents less than it was last year. My God. Any case, I won't digress. All right, so you're up in here. Now, we would be saying, guys, you've got to be on a risk-reward basis. On a risk-reward basis, you've got to be thinking about selling this, because we were out here. It's likely to come back, and it's likely to come down into here at minimum. And if it ever breaks one of these lower bounds, if it ever gets in there and breaks it, fear could take over. That's what we would have been saying. That's what we did say, actually. Now, we had machines that monitor this and other things as well. So now let me drag into view what happened. Isn't that crazy? You didn't have long to think about it. We come off of here. Imagine how bullish you would have been. We come off of here, we gap down, and then we come down, and then it rejects this. We go back up, but we can't get to the other side. There's no more enthusiasm. People are scared shitless. Now, somebody bought up here, and then look at that. And let's go look at where Bitcoin is. And then we're down here. Can the S&P do that? Let's put the S&P on here. I'm going to put the SPY on. Okay, pretty steady. But look where we are. Could the S&P gap down here and this time next week be at 412? And if it ever breaks, could it ever come down to 380? 30, you know? Or it would be on the index 3,800? Could it? Yeah, it could. Probabilities, folks. You don't have to know a whole lot about the narratives of the day, anything about interest rates, anything about anything. I don't play 21 or blackjack, but I know enough about the game. When you're sitting at the table and you have 20 and you say, hit me, you know, that's probably not too smart. Anybody buying up here, technically, who's got any sense of technical analysis knows that buying up here is like sitting at a blackjack table holding 20 and saying, hit me. So no one is going to initiate any buying. They may already be in. They may not short. They may not close the hand. They may just hold, that which is okay. And then they'll hedge themselves so that there's a gap. And then they'll let all the other jabronis come in and start playing in the game and bid up the pool. And that's fine. And then all they will do is just tighten up their stop losses. But they're not drawing down any more cards. So just know we're on borrowed time. You're on borrowed time. So, so if you're new to the game, be careful, because you saw what happened to the Bitcoin, and that's the way the market is on any bubble. If you like this approach to the markets and you're learning a few things from our YouTube, can you imagine what you would learn during our 3-week Q School? And can you imagine what you would learn in a year? The market is not the same day to day, week to week, month to month. It isn't. It's very, very dynamic, and there is a lot to learn. And to that extent, again, we are a mentoring private club. Feel free to give us a shout, and I'm around. And you can call me over the 4th of July. I'll actually answer the phone. 813-758-8263. Next to golf, fly fishing, hiking. This is one of my passions. Good luck, everybody. Have a great 4th.